Hello, all. This is Vaibhav Puranik from Old Money Capital. And today we have Brett Synicky from Sense Financial with us. And he claims to solve one of the most commonly asked problems in the real estate world, and that is how to invest in real estate using IRA money. So let's try to understand how he and Sense Financial can help us invest in real estate. So, Brett, um, welcome, first of all.
Yes. Thank you very much.
Uh,
Appreciate the opportunity, Vaibhav.
you're welcome. And so, and I'm assuming you're based in LA area, right? You're in Orange County as well.
That's right. Yep.
Okay, and I'm in Los Angeles.
Yep.
So we're in the same larger metro area. So you claim that you can help real estate investors invest in real estate using IRA money, right? So
Right.
let's say I am a real estate investor, which I am, and I have an IRA with one of those companies such as Vanguard, Charles Schwab, or Fidelity, right?
Mm-hmm. Mm-hmm.
And I want to use that IRA money to invest in one of the multifamily syndications, or give that money to escrow to buy a property.
Mm-hmm.
Can I do that?
Well, not with your money currently at one of those custodians. So the answer is yes and no. You could do it, but you would need to transfer that into either a self-directed IRA or some other kind of self-directed retirement account, right? A solo 401k as an example, or a self-directed IRA. But if it's Infidelity or Vanguard, you are going to be restricted to what they offer, right? The traditional, conventional investments, stocks, bonds, mutual funds, and ETFs that they offer.
But you know what? I've heard these companies using this term, uh, self-directed investing account or self-directed account. So you said self-directed IRA. Then what's the difference between these two?
Yeah, it's a good question. I mean, first of all, at Sense Financial, we specialize in helping people unlock their retirement accounts and self-direct them into alternative assets. That's our mission statement, right? And so because of that, what we would do is you would come to us and you would say, hey, I have $100,000 over at Vanguard. I would like to self-direct that into real estate, for example. It could be a syndication, buy and hold single family homes, whatever you want with real estate. It doesn't matter. And we say, okay, great. Well, you can transfer that money from one custodian that only allows these funds to be invested in, or sorry, those conventional options, right? Stocks, bonds, mutual funds, or you can transfer the money over into another custodian that allows for alternative asset investing. And I feel like I completely just forgot the question you answered, so I apologize for that. But that's essentially what you would end up doing. You say, okay, I want to self-direct this, so let me move those funds into a custodian that allows for alternative asset investing. I know what your question was. Those companies will say, quote unquote, self-directed. That is absolutely true, except it's self-directed into what they offer and what they offer only. There is no alternative asset investing. They might be able to do a solo 401k where you can take advantage of the high contribution limits, but you're still restricted to the investment options that they offer. So if you want to invest in real estate, cryptocurrency, precious metals, those kind of things, you just can't do it with those custodians.
Oh, I think what they mean is that they'll allow you to pick the stock. Uh,
Exactly.
that's all. That's all the self-direction they'll allow. Okay,
Correct.
but they won't allow you to write a check to an escrow
That's
or
right.
buy real estate. Okay, that I get it. Um, okay, so then uh, I've heard this term before, right? And sometimes alternatively, some people also call it like checkbook IRA, right?
Mhm.
Uh, can you explain this a little bit? Like, what does this mean? Like, what is this IRA? How is it different from the other IRA that we have in Vanguard? Like, explain a little bit more.
Sure. Yeah. So you have a custodian in every IRA, right? There's always a custodian. Now,
So Vanguard is a custodian.
Vanguard is a custodian, Schwab is a custodian, Edward Jones is a custodian, right? There are companies also that act as custodians for self-directed IRAs, even that allow alternative assets, right? So the custodian that we use allows for alternative assets, but you can't get rid of the custodian, right? So the custodian is always there with the IRA. So what we do to give somebody checkbook control, which essentially allows them to bypass the custodian. So right now, if you have a full custodial IRA, it doesn't matter if it's self-directed or not, or alternative assets or not, you still have to go through the custodian for all transactions, any sales and any purchases, any trading of stocks, anything like that, right? Uh, if it's alternative asset investing, like if you want to invest in a syndication and you have a full custodial self-directed IRA, you have to go onto their portal in most cases, type all the information in, and then they're going to fill out the W-9. They're going to fill out all the paperwork involved with holding your spot in the syndication, as an example. But and then title to everything is going to go in the name of the custodian for benefit of your retirement account. Well, what we do at Sense Financial is we say, okay, I know we can't get rid of the custodian, but we can bypass the custodian by giving you checkbook control through creating an LLC. This is a special purpose LLC that's designed to be owned by an IRA. You are the manager of that LLC, the fiduciary of the IRA, which owns 100% of the shares of the LLC, which gives you that checkbook control feature. So you have a checking account. You quite literally have a checkbook and a debit/check card that you can use to do online purchases for the assets that are owned by the IRA only. You cannot commingle this with your personal situation at all. But yeah, you can have checkbook control. Now, we have two products. We have the Solo 401k. Now, with the Solo 401k, we use a trust instead of an LLC. And so with that option, we actually eliminate the custodian altogether. So you not only do you bypass the custodian with the Solo 401k, they're just gone. So there is no custodian. Unlike the IRA, the custodian never goes anywhere, but you bypass them through checkbook control.
But I think solo 401k is not allowed for people who are employed, right? Then and have 401k. Am I correct?
Well, at the risk of going down a rabbit hole on the solo 401k versus the IRA, that is not correct. What it is you have two buckets of contributions for the 401k. You have the employee elective deferral. That's the same contribution you get at your W-2 job. So if you are maxing that out, you can still have self-employment activity. Like you can have a side job, a real estate license, and a W-2, for example, and you can open a solo 401k. But if you're maxing out your $23,000 contribution at your W-2, you're not going to be able to contribute that $23,000 at your solo 401k. However, the solo 401k has another bucket of contributions, and that is the profit sharing. That's a business expense for the business. So approximately 20% of the gross profit of the company can also go into the solo 401k, up to $70,000. So depending on how much money you make, you can still benefit from the solo 401k and self-direct that into alternative assets as well.
Very interesting, very interesting. But you're right. I think that's a whole new thing that we'll have to talk about. But let's just
That's
assume
another
the usual.
That's another episode.
Yeah, another episode. Yeah. So let's just talk about the IRA. So it's
Yes.
interesting. You form an LLC, and then this person is going to be the manager of the LLC who owns the IRA. And then they can start writing checks to syndications or to escrow
Wire
if they're buying
transfer.
a single family property.
Yep.
That's very interesting. So now, who is going to form that LLC? Like, do you do all that paperwork or forming the LLC and all that stuff?
Yes, that's part of our establishment process. We create the LLC and file it and create the IRA. That's all part of what we do. Yep.
Okay. And then let's say I have money right now. Let's say I have 500,000 in Vanguard IRA, and I want to transfer $100,000 to your kind of IRA, self-directed IRA. Is that possible, or am I going to pay tax penalty? How does it work?
Yeah, great question. First of all, there's no taxes, no penalties on that. You can transfer You can do as many transfers from one custodian to another as often as you want in any dollar amount you want with no taxes or penalties. You just have to go through the process of doing it and whatever time it takes to do it.
Okay, so because it's IRA to IRA transfer, there
That's
is
right.
basically no tax implications on that.
That's right. Yep.
Um,
And
okay,
the other thing
that's
I'll add too, we didn't talk about this, but it's important to know you can do this with Roth IRA or traditional pre-tax.
oh,
So I often encourage people put as much money in your Roth as you possibly can for obvious reason because it's not taxed upon distribution. So all the gains, everything, all the appreciation you get if you own real estate, all that appreciation, all of that is tax-free in a Roth. And so that's a very powerful way to invest in real estate
I
as
see. So
well.
if I have a Roth IRA, I transfer that money from Vanguard, let's say, to you, Sense Financial, and open a Roth self-directed account.
Mhm.
And I buy a property for $100,000, and tomorrow it becomes $300,000. That 200,000 gain will be completely tax-free because it's a Roth self-directed IRA.
Yeah, I mean, essentially it's in the quote unquote value of the IRA, right? But it's not, obviously, it's not real money until you sell that
Sell
property.
that property.
But there's no capital gains. There's no need for a 1031 exchange to defer the taxes. There's no write-offs on that because there are no taxes. So it's a very powerful way to invest for sure.
All right,
Yeah.
that's perfect. And then who pays the LLC fees? Because in a state like California, the moment we to start an LLC, we have to pay $800 per year. How does that work?
Yeah, so we at Sense Financial, our establishment fee covers the filing fee, which whatever that is. In California, I believe it's $70, and then the annual fee is the client is responsible for the annual fee in whatever state the LLC is established in. Now, that said, just because you live in California doesn't mean that you have to establish the LLC in California. You can do it in Arizona, where it's a lot less money. I think they have if I'm not mistaken, they have a zero or very low annual fee in Arizona. So that's something we do quite often for our clients. So depending on the situation and what they're going to invest in, having an LLC out of state from where you live is definitely an option as well.
And you will, so let's say I'm living in California and I come to you and say, form an Arizona LLC, and you're okay with that. You will form an Arizona LLC.
Yeah, we'll set up the registered agent service. We'll file the LLC. We'll do it all just like we did, just like we would here. Really, the only difference is, besides the fact that it's a different state, is that you, the client, cannot act as the registered agent. We have to use a third-party service to do that, but that's cheap. It's like $110 a year or something like that. So
Okay. So you are willing to form this LLC in whichever state your clients want. Okay.
pretty much, yeah. Yep.
That's perfect. Does it, uh, so now, then what's let's say I open self-directed account with $100,000 and it takes me, let's say, 3, 4 months to actually make the investment in real
hmm
estate. So during that time, who holds this money, my
hmm
$100,000? Is it you have a bank of yourself, or where do you hold this money?
hmm Yeah, great question. So first of all, Sense Financial doesn't hold any money. In fact, we don't even know how much money you have unless you tell us. So we have three banks that we recommend that are going to set up the account properly. So during the establishment process, one of the steps is going to be opening the IRA, which is the custodian account, the new custodian, and then also opening the checking account. Once those two steps are done, then the transfer from the current custodian to the new custodian is initiated. Okay, so it takes between 3 and 4 weeks altogether to do the IRA LLC. And usually that includes having your money already transferred from Vanguard or wherever to the new custodian. Usually that includes. So that money is going to be held by the custodian when it's transferred in. And then when everything's set up, they're going to transfer that money from their custodian trust account essentially to your checking account. So you're going to have your own checking account. It has the functionality of a regular checking account. We don't have access to it. The custodian doesn't have access to it. That's your own personal. It's not your personal. It's owned by the IRA LLC, but you have that management control over it.
Okay, so that's you give a choice of three banks, and those banks hold your money.
That's
Okay.
right.
That's great. Uh, so now, what's the catch? I mean, do you charge, you know how these wealth managers, like if you put your money in Vanguard and Charles Schwab, they'll charge percentage of what the money amount of money you put in. Like, is that what you do, or how are your charges?
Yeah. Yeah. Good question. I mean, sometimes I wish we had some asset-based fees because we'd make a ton of money, right? But no, we don't. All of our fees are flat. It depends on what you do, but right now we're talking about the IRA LLC. And there is some flexibility on it because our fee includes the filing fee. And so some states are more than others, of course. But normally, our IRA LLC is $2,000. That's the one-time establishment fee. And then after that, it's a flat 250 annual. And that is the custodial fee. And then we also offer unlimited client support, right? So we have our knowledge base that people can log into and get any information they want pretty much, I mean, anytime 24/7. And then we're here. We're not going anywhere. So phone calls, text, email, if people need support at any time. But yeah, the establishment fee and the flat annual 250 are all that we charge. There's nothing else.
Okay, so that establishment fees you pay one time,
Right.
and then every year you just pay $250. So
Starting year
as
number
long
two.
as
That's
you're making more than $250, it's like you're profitable.
yeah, exactly. Exactly.
That's great actually. And I think it's really useful if you're putting big money like 200, 200, $300,000.
Mhm.
$250 is nothing,
Yeah.
pretty much. Yeah. Um, cool. Now, here's the thing, right? Let's say I have the checkbook with me and I opened an account with you. What can I do? Can I write this check to anyone? Or
Mm.
is there something that there are restrictions on certain things? What can I do? What can I not do?
Yeah. Yeah, and this is the topic of prohibited transactions, right? So this is certainly one of the pitfalls, if you will, for lack of a better term, that can come along with this if you don't understand what you're doing. But essentially, it's a vertical line. You, your spouse, okay, you are one, even though that's not a vertical line, you and your spouse are one. And then your parents, your grandparents, your children, and their spouses are all disqualified parties. So they can't benefit from anything that's owned by the IRA. They can't benefit from the IRA. They can't do any work for the IRA. Um, Essentially, blue collar work versus white collar work. You can do white collar work all day long. If I own a rental property, I can hire a contractor to go replace the floors or the roof or whatever. I just can't go and swing the hammer myself. Okay. So that's the difference between what you can and what you can't do as far as those disqualified parties go. And then furthermore, I can't invest in something where one of those parties is going to be the majority owner. For you, you probably want to stay away from like not doing anything in anything that you own with the IRA funds. But even those disqualified parties, if they have a majority ownership in like a business or something like that, and you want to invest in their startup and provide some seed money for them, you shouldn't do that, or you should really consult your CPA before you do. But we're really going to advise that you probably stay away from doing business with family for a lot of reasons besides just the disqualified parties. But yeah, that's really the only thing to watch out for is just making sure you don't commit a prohibited transaction.
Okay. Um, I see. I get it. You can do. And then, so then do you think that if I buy a property myself and if I incur some cost, let's say, of fixing things, or so basically all the transaction needs to happen with this LLC, right? Nothing can come to my account, my own personal account, and nothing can go from my personal account. Everything needs to go from that account, and everything needs to come in the rent to that account. Am I correct?
You are
Okay.
100%. Yeah, don't commingle at all. That's a really
Commingle it
big
at all.
deal
Okay.
with that's a really big deal with an IRA because that can cause the entire IRA to become distributed early, and
Hmm.
you don't want to pay taxes and penalties on your entire balance of your IRA. So,
Right, right.
yeah.
And then are there any regulations or paperwork that I knew keep doing every year besides the LLC usual stuff?
Right. I mean, you're going to want to do the general bookkeeping, right? You're going to keep track of your expenses and the investments you hold. You also have to do an annual valuation. So usually in December, you're going to provide, well, in December, you're going to provide the valuation of all the assets and the cash balance of the IRA so that the custodian can issue Form 5498. And none of this is taxable. It's just like your regular IRA at Vanguard. You're going to get a 5498 with the value of it. But yeah, you're going to provide that. Otherwise, no, there really isn't. There really isn't. So
Okay, that's wonderful.
yeah.
Now, so the interesting thing, which is, are there any risks in doing this?
You know what, the one thing I say besides, okay, so we talked about the prohibited transactions and that sort of thing. That's the risk. But where people get themselves in trouble is not asking us before they do something. We say over and over and over again that we offer unlimited client support. We do webinars just about every week with on different topics and Q&A calls and such. And we want our clients to take advantage of that because we would rather answer the question up front than have them come to us and say, okay, I have a good example. Somebody, one of our clients emailed that they made a charitable contribution from their IRA. And you can't do that. You can't
Oh,
make a charitable contribution for your IRA. Why? Well, because that's not the purpose of a retirement account. The purpose of
right.
a retirement account is to grow it and do that as quickly and as efficiently as you can. And that's your fiduciary responsibility. So that becomes a distribution now. There's no way to undo that. That's a distribution. They're going to pay taxes and penalties on that. I'm not sure of the dollar amount, but that's a situation where come to us first, not after, and we'll save you some heartache and pain. And so that's the biggest probably pitfall is not asking us first. So
That's a great advice. But I know you can do real estate investment. I know, is there, you said you cryptocurrencies. Is there a list or usually things you can invest in and things you cannot invest in?
it's funny. The IRS doesn't tell you what you can invest in. They only tell you what you cannot invest in,
Okay.
which we're kind of thankful for because we don't really want a list that's as long as, I don't know, War and Peace that says what we can invest in, right? So essentially, there's two things with an IRA, collectibles and life insurance, and that's it. Otherwise, you can invest in anything you want.
And what does collectible mean?
Stamps, baseball cards, that sort of thing.
What about wines?
Yeah, that
I
too.
think you can't. Okay. You
Yep.
can't do wines either, right?
Cars, exotic cars,
Okay.
all that.
That sort of stuff. Okay.
Yeah.
Interesting. Um, okay. Now the most fun, or for some people, most boring question.
Hmm.
Are there any tax implications in this whole thing? Let's say I'm investing in real estate, right? Is there, how do the taxes go? Do I have to pay taxes on what I earned? Like, how does it work?
Yeah. Good question. I mean, earlier we touched on it, right? The gains and everything are not taxed. They're either tax deferred or tax free if it's a Roth. However, there is one exception to that. If you invest, well, there's two exceptions. If you invest in real estate and it has leverage, it has a loan, you are going to be subject to that. That loan is going to kick off what's called UDFI, unrelated debt finance income. So simple math, if it's 50% mortgage, 50% owned, 50% of the income is going to be subject to this UBIT tax from that UDFI, unrelated business income tax. The IRS says, hey, we want this to be invested passively. And also, furthermore, we want to level the playing field between somebody doing this with their own personal money and somebody doing it in their retirement account. And so the way they level the playing field is this UBIT tax. So it's not as scary as it sounds because out of that income that's subject to UBIT, first of all, it scales up to about 37%, but you don't get there until about $12,000 a year. And but before that, you subtract the first thousand and you get to deduct depreciation, cost segregation if they're doing that, and then also any expenses. So it takes a lot to get to that amount of where you scale all the way up to 37%. So when you oftentimes, even if you invest a lot of money into a syndication, when you break down what the UBIT tax implications are going to be versus the upside potential of the investment, it's really not as bad as it seems. I know people hear this like up to 37%, and it's like, oh my gosh, that's so much money. And yeah, it can be. But again, it's after those deductions, it's after all the expenses are written off, the cost segregation, all the depreciation, everything involved, and then it's assessed. But before that, you still subtract the first 1,000. Okay, so oftentimes it's not when you pencil it out, and I encourage people to do this before they make an investment. Get with your CPA for sure to talk through this and find out what kind of tax return your IRA may end up having to file, because you are going to file a 990T. Your IRA is on that when you do your taxes the following year. So that's it. Oh, and then the second reason is if the IRS sees that you're running a business within your retirement account, again, level the playing field between somebody personally running a business versus you. They won't let you run a business in your retirement account and not pay any taxes at all. So UBIT, unrelated business income, it's unrelated to the purpose of the account, which is passive. Okay, this is an active business. So we're going to incur this, this UBIT on that active business income, right? Which could be flipping houses over and over again. It could be you own a car wash, whatever it is, right? An active business, because they're designed to be invested passively. So that's how that
But if
works.
you just own a real estate, that's considered passive, right? So you want,
Absolutely. Yeah.
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 Okay.
And if you own
Or
real estate free and
syndication is even
clear,
more passive. Yeah.
and syndication is even more passive. Yeah. And if you own real estate free and clear, there's no mortgage, there is no UBIT in the
Okay.
IRA. So, yeah.
Okay. No, that's fantastic. Again, as Brett said, right? I mean, consult your CPA.
Yeah.
Don't just, because everybody's situation is different. So you want to make sure that, you have checked with your CPA before that.
Yeah.
Any other pitfalls that people should be aware of?
I think if you're going to go down this road, the only other thing I would mention is two things. One, do I want checkbook control or do I want to go the full custodial route? And I'll be straight up front with your audience here. The differences are, besides what we've already talked about, the ease of investing and doing transactions versus having to go through the custodian. It costs more upfront to establish the IRA LLC. Okay, it's more work. It takes a little bit longer, but over time, you're going to save money because you're not having those transaction fees. And depending on the structure of the full custodial IRA situation, it could be a flat fee that you pay every year, or it could be a per transaction fee. It really depends. You may consider doing the full custodial. If you're only going to do a couple transactions a year, maybe it makes sense. I don't know. Because again, it costs less upfront. Where we come in is when you have a lot of transactions. If you hold a rental property, 100% makes sense to have a checkbook control because you have money coming in and going out every single month. If you're doing syndications, you're probably having money come in every month. And maybe you're only doing one investment a year or two investments a year, but you have transactions each month. So that's the difference. Figure that out. And number two, I would say before you pull the trigger with the company, just look at the reviews online, look at the Better Business Bureau, look at Google, go on to websites like biggerpockets.com and see if they're talking about these companies and what kind of reputation they have, because there's a lot of companies out there that do what we do. And just like any industry, like syndication operators, we're not all created equal, right? We all have different levels of experience, different levels of customer service, different customer experiences. And we've been in business since 2010. So we're very established, 14 years, almost 15 years. And so this isn't a pitch to use us. I just want people to use their discretion when they're making these decisions. That's all.
I see. Fantastic. And now, let's say if one of our listeners want to get more information, how do they contact you? Like, is there a website? How can they contact you?
You know what? The easiest way and where you're going to get most info is two places: sensefinancial.com, SENSE, like commonsensefinancial.com. And then we have a YouTube channel, which is has the exact same title, sensefinancial.com. And so you can go in there and watch the videos, and you can book a free consultation with us. That's no problem at all. We'll talk through your situation. Even if you don't become a client, I promise you're going to leave with some value and knowing things, probably several that you didn't know before. So even if you're kind of like just starting this process or really serious, wherever you're at in that spectrum, I invite you, book a call with us. It's free. You have nothing to lose. So
That's great. I really learned something new today. This was great, and thank you very much, Brett, for your time. We should definitely do one more episode on solo 401k. I'm sure I'll learn a ton of things. I know nothing about it, and my listeners probably, there are a lot of listeners like me who do not know about it, anything about solo 401k. But thank you very much,
my pleasure.
and good luck to Sense Financial.